All right, everybody, welcome to the weekly recap, right? And this week we are going to be breaking down tons of strategies, right? Everything ending in week ending of April 29th. Wow, the end of the month, end of April already. I can't believe how quick these months are going, right? So we started this Discord on January 1st, right? That's when we first started it. And then March we went live, right? And now we are at the end of April. And I was actually going through the Discord last night just at uh, all the posts that we've put in trading metrics, right? And on all of our strategies, whether it was the VWAP rejection, supply, demand, rejections, end of day, and just really looking at just our edge and how well it works and what type of conditions it works in. Like this recap, I really want to break down some things I struggled with this month, and that was the ability to identify the conditions properly. I know me and Todd talked about this before, and I know we all have, but I was looking at my journal recently in just the month of April, and I realized every bad trade, or I'm sorry, every non-profitable trade that I had, I was trading against trend or I was trading against market conditions. So I really want to kind of go through and flesh that out today and be able to go, hey, what's the best way to trade with smart money, right? Because obviously, as a supply and demand trader, I used to limit that to reversals only, right? I'd be like, oh, and I want to really kill that methodology because just because you are in supply doesn't mean go short, right? That kind of brings us to that area of value topic where a supply zone is an area of value where we're looking for volume and we're looking for an opportunity, right? So that doesn't always mean go short. And we've obviously seen that over here. We've seen tons of it. I mean, Friday, perfect example. We were ripping right into this supply zone over here at 322, and it didn't mean go short. You know what I mean? If you went short here, you'd have got ain't alive. So, and just really kind of talk about what are some easy ways to identify the conditions and trade with them. So, yeah, it was it's really important to see that. And I remember, Todd, we were talking about that. Every single losing trade I had, I was trading against market conditions.
Yep.
Like,
Yep. I go back through it every week, and every trade that I've lost on, that's what I was doing. I was trading against the trend, and it may come down a little bit, go my way, and pops right back up and goes to it.
Yep. Yeah, and we were talking. Yeah, so it's but overall, I mean, markets present us opportunities. And that's what I love about our edge. That's what I love about journaling is going through and actually seeing where you went wrong, right? So that's another thing. So when I first started journaling my trades, right, which was probably like 2 years ago, all what I would do was, let's just bring up a day real quick. I would journal a trade, like, a winning trade, and I would write all this material, right? Like, I'd be like, oh, break and retest, went short, absolutely crushed it, great trade, all my strengths, XYZ. But then on my losers, I would literally copy paste, put how much money I lost, and walked away. Not even look at what, and it's hard. It's really hard to look your losers in the face, because it's admitting that you're not getting better. Like, or at least that's how I looked at it, right? Every losing trade I took, I would be like, oh man, I slipped up. And until I started really looking at those trades and being like, wow, where did I go wrong? Right? Well, obviously I was trading against conditions. Well, why was I trading against conditions? And a lot of the time it was I missed the initial trade. Like, this is a perfect example right here. I took this losing trade right here on Thursday. So we have a supply zone right here, and price rallied right into supply, and I missed this initial trade. So what do? I go, hey, I go short in supply because that's just the next opportunity. Completely disregarding that the conditions are bullish, completely disregarding this inverse head and shoulders on a large time frame, right? Completely not looking at any of that. Instead, I missed this leg up. So now I'm looking for sellers to show up in supply, which you can see they kind of did, but this wasn't I was trading against trend here, got stopped out, and then we kept getting met while price kept rallying into supply zones, and instead of going long, right, I let that kind of affect my ability to perceive an opportunity, and I missed out on it, right? So it's really cool to go through your journal and look at that stuff. It really gives you an idea of what's going on.
It's funny that you say that, because it's one of the only question I really thought of asking, but I didn't know how to ask it, because with so many years behind me, it sounds kind of silly. Well, how do you guys identify a daily trend,
right,
going into the day? I'm looking at overnight, I'm looking at previous day,
yeah,
and maybe the previous few days.
Yeah.
And very often I don't really know how to make an assessment until the market opens, and it depends on how hard it starts charging in one direction or another. And I've had days where it's really profitable to just take the whole zigzag. The whole day's been a zigzag between supply and demand.
Yeah.
And I can take multiple trades, bouncing off of each. And I'd have to say, well, the day didn't really have a trend, right? But the output didn't look much different than the day that did have a trend. So, yeah, I just find it difficult to anticipate beforehand, what the trend really is.
No, yeah, you're 100% right, and it's always going to change, right? Like obviously, a day like here, you're kind of you're going in between supply and demand, and then a day like here, you get this large leg down and then a rejection. So basically, so every single day in the Discord, right, I'll put a bullish and bearish scenario, and they're pretty they're pretty. It's overall what the day's going to look like if it rallies either or. So one thing I've been doing, Rob, is I will be super patient. So I used to be the type of trader, right, where if price came into my zone or area of value, I would look for a good one candle and go for it, right? And that's just what worked for me at the time. And one thing I've realized is that's not working for me recently. So I'll be extremely patient. Like on this day, I'll wait until I can really, and every trader knows when they see it, right? That the good trade, you know what I mean? Like this day right here, when we had pre-market low over at 409.89, and price kind of rallied and then came down, and on the 5-minute we got buyers right here, right? And the old me would have just went long here, because you could see we had this wick, buyers were here, but I judging with how quick sellers came in, I just didn't feel that comfortable going long, and I was just a little more patient. I was like, hey, if buyers really want to defend this, they will, maybe on a retest, and if I miss it, so what? And so I was kind of like if then statements, right? And then price broke below, and I was like, thank God I didn't go long, right? And and patience really paid off here. And I guess it's like I haven't been making a trade unless it made sense with the market conditions, right? So instead of trying to figure out the market conditions, I wait for the market to tell me them, right? So in this case, it was if price breaks pre-market low, which it broke, and then came up and retested right up here, and then sold off for the rest of the day. And hold on, my mouse is giving me some problems here. Okay, there we go.
Yeah, I know exactly what you mean. It's difficult to wait for that extra confirmation, because you're thinking, well, if I wait too long, the next candle is going to be nice and long if it is a confirmation,
right?
And that means my stop distance is going to be double what it originally was if I got in earlier. And then it chops my risk reward in half. So do I really want to wait that long, right? So but really, in retrospect, as you said, when you actually do the wait, that second 5 minute or whatever it is you're waiting for does come pretty slow. And doesn't turn out to be as bad as you thought it was. When you actually wait it out. So
I mean, and it really saved me here, because check it out, right? We had pre-market low over here, 409.90. Price just was super violent sell-off into it, and we were met with buyers. And I always look at this as an auction, right? So when you get a violent sell right? That's telling me there is a large seller present. And then even though some buyers show up, which makes sense because it's an auction, right? We got buyers here that no matter what are going to buy it at 410. And they showed up and there wasn't enough of them, right? And so that increases the supply for the commodity, and then the sellers come in extremely hard, and then all the buyers that went long here, this right here is their stop loss, right? So they literally let price come back, they get stopped out of their trade, and then woo, that's when you get the real excessive move down. So what I've been trying to do is really understand what the candles are telling me, and obviously waiting for that 5 minute to close really helps you, because at one point this was completely green, and then in the last minute those sellers came in, and then it was like, okay, this day is going to really sell off, and it did. And I feel you though with the whole skewing your risk reward. Me and Darren were just talking about that, and it's very hard to do, right? So let's talk about this day. I got faked out hard here on the break and retest. So this right here, and one thing I love about the break and retest though is I was able to keep a very tight stop here. So we have pre-market low over here at 405.80. And this day was really specific because if you go back on the 4 hour, we broke this demand zone at 406. And I was expecting a very large move to the downside. Wait, is this the right day? Yes. Yeah, right here. So I was looking for, yes, a break below 406, and I was going to be targeting 404. And then we broke 40 pre-market low for this 406 area, and then I go short right here because I was I was like, nope, this is it. But if you look at the 5 minute, I had no business going short here because buyers soaked up that last 2 minutes, right? I wouldn't go short on this candle if I waited. You know what I mean? And so I guess what I'm trying to say here is the longer I wait and the more confirmation I get with the candle in the area of value, the higher probable trade it's going to be. And it's and it's a double-edged sword, because sometimes the longer you wait, the worse your entry is. And there's got to be that sweet spot. Every trader's a little different. So I remember Todd saying he gets in on the 2 minute, and if it stops him out, he's done. And then he'll re-enter, But yeah,
is this the day that I was talking about the break and retest of the century?
Yeah, look at this. This was going to be a massive break and retest, and then it rallies. And I had my stop. I entered right here, and I literally had my stop at 406, so I didn't get cracked that bad. And then there was the break and retest right here. I felt like smart money was just fooling maybe just me this day, because then it broke out of here and then came down, retested. Then I went long right here, got stomped out. This day kind of played with my emotions, and then rips down. And that's going to happen, though. You know what I mean? That's just going to happen. And I think that's why the whole, identifying a strategy that works and understanding it's not going to work 100% of the time, right? Like it's only going to work, even if it works 50% of the time, but you trade it properly and with the right size, it really helps, right? So one thing I've been doing is I lowered position size this month, and it's been working so well for me. Like my anxiety, and I will not enter a trade unless my trade plan is so present. And I know we talk about that every month, but I think it's really important to understand that it's one thing to talk about it and it's one thing to do it. And so what I mean by that is, hold on, my mouse again, is, waiting for a trade plan. So Friday, this day, I went into this day, as you guys know, I've had 2 uncles pass away. I was at a funeral in the morning, and then once I ended up getting out, so my trade plan this day was really not even trade, but sometimes as a trader, you're going to make a trade. And so my criteria was extremely strong here, where I wasn't going to make a trade unless it was a bullish scenario, because on the daily, we had very bullish conditions. So this is one thing I do that helps me identify market conditions as well. So every day I'll go on the daily time frame and look at the candles as if it was an intraday time frame, right? So if I was trading the S&P 500, like say this was a 5-minute chart, and you get this, rally consolidation, and then you get this volume bars, right, kind of breaking out of this 404.35 demand, and you get these large engulfing candles, that's very bullish. So I'm not looking for shorts this day because of this huge green candle. You know what I mean? If this was a 1-minute chart, I would be looking to go long, considering we have we're retesting this 418 area right here. So I'm trying to capture this move going up. So I guess what I'm trying to say though is use the larger time frames to help you identify the overall conditions that day.
Yeah, that's what I was going to say to you, Rob. If you look at the 4-hour on QQQ especially, and also SPY.
Yeah, look at that.
You can see, go to the 4-hour specifically, and you can see that yes, we were in this downtrend, but at the same time,
look at the false breakout and then the rally.
At the same time, we saw all of these wicks going down into demand. So I had this trend line which we were respecting for the last 7-8 days. But before we even started moving up, I saw all these rejections to this demand, and those happened at the end of the day. Literally after the market closed, we saw these massive green candles, and that was some clue for me that we could possibly break this downtrend.
Yeah,
and we were seeing very similar things on the S&P as well.
Yeah, So I'll always break out these large time frames and be like, okay, check out the volume, right? Like who's getting respected, get these wicks, and then say I'm going. And this is something I struggle with, right? And especially I used to. I'm getting much better with it. But I'll identify bullish market conditions and then go short in a supply zone because that's just the first trade that presents itself. You know what I mean? So it's like.
I did that exact thing.
Yeah, it's like, okay, look, this is extremely bullish, but we're in supply. I'm going for it, right? So what is that, right? And you can call it self-sabotage. You could call it trading your edge because it is, right? That is a supply zone that's been respected. And as I grow as a trader, I'm starting to avoid these mistakes anymore, right? And because what I'll do is go, okay, this on a larger time frame, this is very bullish, even though we're going into a supply zone, right? I'm not going to counter trade smart money, and I guess it just all comes down to being able to really identify those conditions, and it is a skill that takes time. It's you'll never do it perfectly, so don't beat yourself up, right? Like I beat myself up a lot. Because I'm going short in bullish conditions. I'm going, what am I doing? So I
think so we're in a downtrend. So supply zones have been respected more than demand zones. So it's natural to go short when you're at this level of resistance or you're at a supply zone. But however, if your market conditions are telling you something that counteracts that downward trend, that's where shorts will all get trapped, and sellers will get trapped at that level, and everybody's thinking bearish because we've been in a downtrend. And that's where the fluidity to be able to react to what you see in the moment and not get caught in these trends. That's where that comes into play. Huge.
Absolutely, because that's what it did look like. So anyone that took this trade,
sure, it makes total sense. It's going to look like your setup. It's going to look exactly like your setup. But the only thing that tells you otherwise is your market conditions are not agreeing.
Yeah. And if I can come in on that trade, I took the same trade. I took a short right there. But what I did, I pulled the fibs from that bottom wick.
Yeah, right here.
And I targeted the 50 to 61.8, and I seen it holding. That's when I got out.
Okay, I like that because so check that out. That's one way. that's one way of identifying it, right? Because now it's going, hey, if it respects the 50% retracement, that means buyers are in control. I really like that. That's really good way to, because all what candlesticks are is the battle, right? And we need to be able to identify who's winning the battle, and that is one great way of doing it. That's a really good idea, and
I do like that, because that allows you to think, like, if I was a buyer, where would I get in?
Right.
And if it respects the 50% fib, then that's your chance to get out or long, whatever you're in. It's a good point. I like that.
Absolutely.
And a lot of it's been. I try to make everything to myself as simple as possible. So I've been seeing a lot. I want to be a buyer at a higher low, and I only want to be a seller at a lower high.
Right.
And that's just about how I've been trading these last few weeks, and it's helping me out a lot.
Yeah.
Trying to make it simple.
So I definitely want to talk on that for a little bit. So the simplicity, right, is so important, right? So I've talked to a lot of traders, right, and one thing that we all struggle with is trying so hard to have all these areas mapped out, all these different strategies, moving averages, XYZ, right? And one thing that someone on the Discord had a lot of success with was identifying previous day high and previous day low and looking for the break and retest. Now, this is one of my favorite trades. So I'm trying to find an example of it, which was right here. Here was the first one. This is another very good way to identify market conditions. And if you get rid of the pre-market data, it kind of makes it look a little better. But I'll just leave it on. But so when you have a previous day high, and I know I put this a lot in the Discord as well, but if you can open above previous day high, right, which right here was 407.83. Let me just get rid of this. So since we're opening right next to it and right above it, I'll let the market rip and come back and retest. And when we retest, if buyers show up there, that's telling me, hey, in a bullish scenario, that's what I want to look for, right? Like I really want to look for buyers to defend the previous day's high, right? And then that's exactly what happened this day. And the market ended up rallying. And even though I had that methodology, I still went with a short play, which is literally nothing other than me trying to outsmart the market. You know how we always talk about market psychology and Mark Douglas. So that's something I'm working on, right? I don't need to be smarter than the market. I literally need to simplify it, because if I just stuck to my original plan this day, I would have captured the biggest move of the week. So I love that. Any way you could simplify the market, I don't care if it's one strategy, right? I don't care if you only trade double bottoms, double tops, or, just figure out a strategy you like and stick to it.
You know what I was just thinking, Josh? Okay, so we all made this trade where we went short after we identified bullish market conditions. Yeah. And one of the things that I saw in my journal is that I've been weirdly attracted to taking these trades which have a probability of going in both directions, right? So we have a downtrend, so there's that. Yeah. We also have bullish conditions. So I take a trade which can go one of two directions, and I'll have a way to justify it if it does. But the problem with that is that's basically releasing the accountability for myself. So I'm attracted to trades that have the probability of going both ways. So if it does go one way, I can justify it. And that's basically a crippling part of my trading. Oh my God.
That's why I love you, Darren. That's such a good point, bro. Because all right, so what Darren's talking about,
I'm saying, right?
Yeah, absolutely, 100%. So one thing as traders, now I'm pretty sure everyone here has read the book A Disciplined Trader by Mark Douglas. If you haven't, you must study this book. So it breaks down all the trading errors and basically the psychology behind it. So what Darren's talking about right now is accountability. So as a trader, or even as a human, it's easier to take trades that have a higher probability of going in either way, because if in this case Darren's wrong, he has a reason to be wrong, right? Versus blaming himself for not being able to understand the conditions. So we'll look for trades, right, and go, oh, I went short because XYZ, so it's okay to make a losing trade because of XYZ, right? Kind of taking the accountability out of it, right? So that's
giving yourself an out.
Yes, giving yourself an out, right? Like, oh, that's why it happened. And now when we do that, the next time we're in that scenario, we're going to do the same thing, because taking accountability for your trades doesn't mean beating yourself up. It doesn't mean going, hey, I made this trade and I'm lesser than a less of a trader because of it. Taking accountability for your trades is breaking out your journal and going, hey, why am I losing money? Why am I having red days? Right? And really breaking down and going, hey, the reason I'm having red days is I'm trading against trend. That's it. You know what I mean? Just identify any reason that's holding you back and then work on that. And that's kind of how I understood this month that I was struggling with trading with trend and with smart money, because I was willing to dive deep into my journal and go, hey, out of all these losing days, what was one common denominator? Right? Like that accountability is it's very important.
Yeah, I mean, if you're not taking a trade which has probability of going in both directions, then that's full accountability for your risk. You can't blame it. The only thing you can blame it on is your analysis that was wrong.
Yeah.
And that's basically what we want to be testing. In the end of the day, we want to be testing that edge and testing our intuition. We can't just be like, if there's a probability of it going both ways, it's just too much like gambling. Yeah. And it's funny because I never actually realized that specific example. I read in my journal this week where I did that once before, and I didn't even notice that I was doing it on that specific trade. But it's literally the second example this week where I was, and it's completely subconscious. Yeah. Like nowhere in my thought process did I think that I was protecting myself, but like it's just, you just do it subconsciously. Yeah. It's so weird.
Yeah, and that's, and like we were talking before, right? Like when you were a kid and you were learning how to tie your shoes or ride a bike, in the beginning it was very hard, right? You had to think of everything you had to do. And then as you got older, you started to make these decisions subconsciously, right? Like we could all hop on a bike and ride perfectly fine. And that is exactly how we got to look at trading. And that's why it's so important to keep a journal. And a lot of people ask me like, hey, what do you write down? Stuff like that. And everything I write down, it doesn't have to be a book. Just copy paste the trade. Another thing I do is copy paste larger time frames, right? So if and when I took this ABCD pattern right here, I'll do it obviously on the 5 minute, and then I'll do it on the 1 hour. And be like, oh, okay, so if this was a losing or if this was a winning trade, or so this was a losing trade for me, and I copy pasted a larger time frame, clearly I didn't identify this trend line breakout, and if I did, I didn't act on it. Okay, so one issue of mine was being able to adapt to the market conditions, right? So it doesn't have to be a book, but it just needs to help you kind of identify what's going on and where your strengths and weaknesses lie. And then once you figure out your strengths, right, like Todd said, that's when you simplify it and only do those. Or, and you don't have to only trade that, but, just trade what you're really comfortable with. And remember, it's not...
Another thing I like to include in my journal is what I did right. Because it's literally... the worst thing when you make 2 losing trades in a day, you literally feel like a failure, and the last thing you want to do is to journal your trades. But if you actually look at what you did right and what was right in your analysis, I guarantee you're going to find something that was right.
Yes.
You don't need to go and switch up your strategy after you make 2 losing trades. Yeah. No, your strategy was fine. There might have been small things that you needed to tweak. But even on the days that you lose, I guarantee there's multiple things that you did right that you will want to repeat going forward. Yep. Make sure that you solidify those things that you did right every chance that you get, because you don't want to, if you did something right, you want to make sure that you do that thing again and again and commit it to your subconscious. So that's another thing which you can do, which will help you journal your losing trades is go through and look at the things you did right, because they're gonna be there, even if it's just one or two.
Yeah, absolutely. Now, one thing I want to touch on real quick is just like you were talking about, Darren, knowing what you did right. The break and retest has been a lovely way to trade lately. So this day was a very good day, right? We got this break and retest right down here, and I just really want to flesh out what a textbook break and retest looks like, and this is literally it. So, like I was just telling Rob, I've been extremely patient lately, right? So instead of taking this, double top in supply, I'll be patient, right? And I'll let price fall down below pre-market low, right? So let's check this out. We're in a downtrend on a larger time frame. This day is 4/25/2023. Okay, so I'm going to whip out the hour. So we got 4/25/2023 right here. So we had a demand zone right here. I'm just going to actually pull this out a little further, which happened to be pre-market low. So there was obviously a buyer there. Hold on. Oops. Let me just grab that. TOS is not my friend today. Okay, so we had like this demand zone here. We're in a downtrend, so I'm going, if we can break below this 313 level, right, we're going to really sell off. So identifying the market conditions, we're in a downward trend. This is being respected. Now my trade plan is, this is my area of value, right, because this is my process. Number one, identify the market conditions. Number two, identify your areas of value. Right, so we got our demand zone right down here. Number three is identify an entry indicator, right? So in this case, it's if we can break below pre-market low, I'll be looking for a retest, right, up into this 313.80 level. Now remember, I'm not just going short when we break this, right? Even though everything in my body's going, hey, you're missing the move. You're missing the move. Go short now. Nope, I'm waiting for this retest, right? And that right there is the difference between a profitable trader and not, is the patience, right? So price then rallies right here into 313.73, and we get this large bearish candle, and I look at that, and then it comes up, retests it, and then and this is a perfect example, right? Say you go short right here, right off the rip. Literally, price rejects, stomps you out, and then goes the exact opposite way. So this is where patience has been really helping me lately, right? Because if you wait here and then you get this, way larger volume right down here, and then go short, and then for the rest of the day, she sells off very nicely. But say you miss this first initial move. And this is why I love patience so much, and I love being able to identify the conditions properly, because even if you miss that first initial move, look at the next break and retest. Breaks below, right? Comes up, tries to retest, boom, just keeps selling off, right? So it's I just really love how well that break and retest strategy works. I feel like we've seen it a lot lately. And just being able to capitalize on that is super important, and it's literally, the 5 minute works really well, because you'll see these go rip right into it, and then the sellers come in right at that last minute, and it's super lovely.
Look how easy it would have been to get faked out at the beginning of that day that you were just at. Like we rejected that level in pre-market, and then there was a massive bullish candle. Massive candle. That went up, rejecting from that level. So, if you're trading the first half hour of the day, you better be on your A game.
Yes.
And you better have your stops in place, because that right there
would have killed you.
I mean, that could be interpreted very bullish.
Yeah. What day are you looking at?
This is 4/25/23. So this right here is hold up. So 4/25. That was Tuesday. So I remember looking at that candle, Darren.
Yep.
And I'm like, damn, I just missed the long. And I didn't even care, though. I didn't. Because then, literally in the last 2 minutes, all those sellers came in, soaking up all that liquidity. And that's right there when I was like, oh man, I'm looking for break and retest today, because if we could break below this area, right, which was super strong demand, right, I knew we were, that's telling me that sellers are in control, because if buyers can't hold this area, they can't hold the rest of the day. And that's literally what happened. And it sold off huge. And then this,
that thing was wicking off right off of 50% on the fib. I mean, wicking off of it too. Yep. On the retracement, that thing was nice.
Oh, really? Oh, what, to the downside?
Mm-hmm.
Oh,
yeah. If you pull it from the top down.
So yeah, ready?
That's
Oh, so okay. So right there, boom.
Yeah, those bear flags and bull flags in the top 50. Yeah.
So
every time.
Yeah, I really like that. So, just so everyone knows, we'll run through it again. When you get a large sell-off candle or a buy candle, whip out your Fibonacci retracements and see if it gets respected. And bam.
Where did you go? You went from the top there?
Yeah.
Basically the top and the bottom of that red candle?
Yeah.
Mm-hmm.
So we'll put it right there. And there it is.
My eyes hurt. You got to zoom in. There we go.
Bam. It's kind of... Hold on, ready?
I see it.
Bam. Yeah, look at that. The next one literally rejected the 50. This one kind of faked out. But yeah, and now it's like, okay, so what this has given you is a solid trade plan, though. And that's why I love it, because I used to make trades because I was like, oh, some buyers coming in demand, I'm going long. That's not a trade plan. I'm sorry. Like, yes, it works. But, this right here is telling you, hey, who's in control of the market, right? And it's literally telling you right here, sellers are in control. They're respecting the fibs. Let's go short. And then the next day was this day right here was it was a crazy fake out day for me. This day I actually had one of the best trades I've had all year. And I want to break down kind of what was going through my mind. I'm pretty sure Darren took the same trade.
Yep. Yeah, snagged that.
Yeah, this right here was beautiful. But look, it was definitely this is where that previous day high and low comes into play. Okay, so going forward, we had this area of value right here at 315, right? So we're gonna call this supply, and we're gonna call this was end of day, right? It was way below. So the areas I had mapped out were this. So I had previous day low, previous day high, and then pre-market low and pre-market high, which these kind of added up. So I kind of want to break this down. So when you got pre-market high of 414.43 and you have previous day high like $1 away, I always go with the further one, right? Because that's what works for me. I would rather wait and see what happens in this supply zone than take this short. And you can see both these short people that went short here got eaten alive and faked out. So if you ever identify two areas of value close to each other, just go with the one that's furthest away from price action. That's what works for me, because it's better to be patient and wait to see what price does here at 315 versus taking this short and then and just risking this whole move, right? Because you don't want to
protect you.
Yeah, you don't want to go short right here and go, hey, I cannot get out of my trade until 315 because sellers could potentially show up here. You know what I mean? So you want to take the trade that's going to give you the tightest stop loss, which in this case would have been going short at 315. Because obviously if you hold above previous day high, this has a high probability of rallying. So the way I traded this, though, because I've been really trying to work on patience, is I waited, right? So 315, we get this rejection, and then we get this bear flag, and then it sells off heavy. So I'm still not in the trade. I actually wanted to go short when we held below this 314 level, because if we could hold below here, I was looking for a break and retest, which is actually exactly what happened. And so this is when I ended up taking the market short here, and then I drew this channel. And I don't have VWAP up right now, but if I did, you would see it kept breaking off VWAP, and this was one of the trades where I was like, okay, I'm targeting low of day. I'm not taking the 30% right here or the 50%. I am staying in this trade, and because I think it's really important to identify a trade plan and see it through. For so long, I would get in these trades and I would make 20-30% and get out. And yeah, that made me money, but I also left tons of money on the table, and it affected my mentality. So it's really important to like identify a trade plan and just see it through. I know and if that's hard for you, just lower your position size, because if you can trade one contract but see it all the way through, you can do it with 100 contracts and become wealthy, right? So it's really that was my idea this day. I was going, hey, I'm going short, and sellers really held together, and then we broke below this channel and then just sold off beautifully straight in the low of day and then further. That's exactly when I took profits though, and it was a really good trade.
Yeah, I took the same one. I think I took it on QQQ, and I had identified this downtrend, which you have it drawn a little bit higher than mine, but I knew that we were going to try to retest this level at some point, and yeah, we kind of got close to it, but we hit that supply zone, and I had a really good entry on that one.
Yeah.
I literally had my phone. I was like in the middle of a final exam, had my phone under my desk. I got in the trade, and then like set my trailing stop, and then got out of my exam, and then watched it all the way down to the supply zone.
Yeah.
But it's this kind of trade that does not happen the whole time. You know, these are like what you call home runs, but they're not the trades that I look for every single day. You know, it's just sometimes it happens that you pick a good strike and you make like 200%.
Yeah.
I don't want to advertise it as something that I do every day, but like I'm just glad when I do catch them.
Well, and it's really important to understand something here, though, right? So you have a supply zone, you have a demand zone. These market imbalances do happen daily, right? And what I mean by that is this move between supply and demand happens daily. It's so crazy, and I'm not saying you got to hit the 200%, but understand where your supply, where your demand is, and just trade in between it, right? Like we were talking about with that simplicity. That is what I try to do every single day, and you know, going long right here is another perfect example. Right, buyers showed up really strong. Going long right here, that's completely fine too. Just capture those moves. It's just all about identifying your areas and capturing the moves in between. I really like this setup though, because you have this massive rejection off supply, and whether you went short here and kept your stop loss right here above 315, that's completely fine, or whether you go short below right here. Right, in this scenario, my stop loss is right up here because I need buyers to bring the price right here for me to go, hey, conditions are still bullish, right? But if they can't, I'm targeting down here, right? So I really want everyone to kind of understand how that works, right? It's like, hey, I got supply right up here, I got demand. I'm looking for price to break below here, because if price holds below 314, that's telling me sellers are in control. This is not 100%. I'm going to go short. If price rallies above 314, I'm out, right? That's how I identify a trade plan. And, and until I see something like that, I'm not trading, right? Like we
and you see how it made that lower high? I mean, that's telling to me when I'm looking at it.
Right here.
When it can't make a higher high, it makes a lower.
Yes.
Yeah.
Yes.
That's my key. That's where I like to be on a trend.
Absolutely.
You know, seeing it come down and can't make that higher, so it makes a lower high.
Yep.
And then that's where I like to strike at.
Well, and what that's telling you in a market auction perspective, that's telling you that buyers are still present, but sellers are way stronger, right? And that's how we got to be able to look at these candles, right? We got to be able to look at these candles and like, hey, this is bullish, right? We're rallying. we're ripping into supply. What do I need to see to put on a short play, right? Because I'm not just going short in a supply zone. I need to see some confirmation that sellers are taking control of the market. Perfect example is a lower high, right? And then what that looks like, buyers show up and sellers just dominate, right? And then we break below this level. All right, say you miss this move. Now I'm looking for a break and retest to solidify my trade plan that sellers are in control. Bam, it's exactly what happened. And look, it literally comes down because the market imbalance is in full effect here, right? You got supply, you got demand. Buyers aren't just going to show up right here and make the market rip. Yes, it could happen, but there's a way higher probability that the whole market imbalance is going to happen. That's why it's really important to use supply, VWAP, demand, and end of day as entries and targets, because there's a very high probability that these things happen every single day. And that's the whole idea behind the area of value edge, right? It's like, hey, these are areas on a chart. Like, look at this end of day rejection. This is crazy. Like, I traded QQQ, and I actually went for a swing trade because I wasn't able to trade like vividly behind my computer this day because of the funeral. But check this out. I mean, perfect. So one thing that works really well for me is, you're in a bullish market condition. Buyers showed up very strong on Thursday. What do I have to see for price action to tell me buyers are still in control? That's opening above end of day and then coming down, retesting it with strength. It's exactly what happened here. Touched end of day perfect to the T, and then buyers rallied, and so on and so forth. I ended up getting QQQ, and I'm actually currently holding some contracts. I rarely swing trade, but I thought this was an alright idea considering we have been testing this supply zone and we broke it. So, so I went with some contracts out, and I'll be targeting 330. And the reason I'm really doing that too is I really I want to branch out, right? I think it's important to take trades you're not comfortable with, and this is definitely swing. I don't swing trade. I'm a day trader. I'm in and out of the market daily, so I'm trying some different stuff, right? And I think that's the goal of trading, is getting comfortable being uncomfortable, right? Like, I was talking to a trader recently, and they're like, oh, I don't know why I took this setup. It's uncomfortable for me. I should only take setups I'm comfortable with. And I'm like, no. I was like, we need to take setups we're not comfortable with, because I truly believe trading is all about stepping out of your comfort zone. You know what I mean? And learning, new ideas and new strategies. So, yeah, it's really good stuff. Does anyone have a trade they want to go over before we start wrapping up?
Yeah, I'll go over one.
Let's do it.
Let's say Friday.
Let's do it. All right. So you were in ES, Todd? You want me to pull up ES?
Yeah, I was on ES on a 2-minute.
Okay.
Let's see. Hold on, I'm trying to pull mine up too. Where we at? I was actually was in long, like 5 minutes. Was it 5 minutes? Like 5 minutes before open.
Nice.
I put my trade in.
Like right here?
And
oh no. Yeah, like right here.
Yeah. No, it's like, find it. Yeah, at 8:26.
Okay.
That green bar took out that red right there.
Yeah. Hold on. Let's see.
I was in there, and I had my stop.
Oh, this one. This one right here.
Yeah.
Perfect. Okay.
Yeah, and I should have held long. My biggest problem is holding on to winning trades.
Yeah.
I leave a lot of money on the table, and I got to get over that. It's just something I got to work on.
Yeah.
My entries are good, but when I'm in the trade, I try to micromanage it, and I gotta get that under control.
Yeah.
my entries always seem to be good. It's just I get 5 or 6 points and I snatch it off the table, and I shouldn't.
No, that's dude. That right there is something I think I still struggle with it. It takes time. That's why I was talking earlier, right, about position size. So I truly believe like so I guess where I'll start is the whole trade plan thing, right? So every trade I put on, I'll be like, okay, I'm looking to go long here, and if and when I do, where's my target? And then it's still hard, right? Because I mean, you get this breakout, boom, and then price rallies. Right here, you're up $500-600, $700, $1,000. It's, and I think we've talked about it before about duct taping the P&L on our screens. I mean, that's a great idea. It really is, because obviously our goal as traders is to become consistently profitable in a way that we can become wealthy, or we could, consistently make at least 1,000 to $3,000 a day. I think is really the goal. And overall, to get there is to have that process, right? And it definitely takes a lot of time. I think I remember telling you guys a while ago, there was a time where I got out of my trades 84% of the time too early. And that really stuck with me, right? And that's another reason why I love journaling, because the more you journal your trades, the more trading errors you're going to find. And so out of 10 winning trades, I was getting out of them 8.5 times too early. That means out of 10 trades, I only hit my target once. And the math on that is insane. I mean, even if it's $100, which we all know it's more, it's we're leaving thousands of dollars on the table. So that's a really good entry, though, Todd. Let me ask you, why did you go long? Did you identify this demand and then identify this higher low, kind of in a larger aspect? Like, what told you? What told you it was bullish?
Well, as you know, Josh, a lot of times I use these pivot points, and
yes,
at 7:30 it bounced off that mid pivot and started to go up.
Yep.
So that's telling me I'm going. I'm looking for longs.
Yeah, it was respecting it.
Right. So it was either going to come down and retest it again, which was the pivot, or it was going to the next pivot. That's kind of how I look, kind of pivot to pivot, which is basically supply and demand.
Yeah.
That's what I was looking at. And I use the EMAs. A lot of people don't, but I find them extremely effective. So,
what's that, the moving averages?
I try. Yeah.
Nice.
Yeah. Like on a 2 minute, I use the 20 SMA. If that thing's rising, I'm going long. If it's declining, going down, I'm looking for short.
Really? All right, hold on. Let me pull that up. The 20 SMA.
Yeah, on the 2 minute.
Let me see here. So
usually, whichever way that 20 is going, up or down, that's the way I'm playing.
Nice. All right, bet. Hold on. Let me throw that in. Boom, boom. 20. Now, Todd, I remember you telling me. Hold up. Is this? Hold on. Is this the SMA? It says daily SMA. This might be the wrong indicator. Hold on.
No, that's the daily. Yeah, I'm talking about the.
Here, ready? I'm just gonna do. DMA, boom, right there. Yeah, the moving average, and that's another thing, right? It does not matter what you like. Everyone trades differently. If the moving average is helping, use it. And now let me ask you this, Todd. So you're trading the 2 minute. It's looking like this. It's respecting your pivot. And so what are you looking for? Let me make sure I got the 20 up right. So you got the 20 minute or EMA. So you said
simple moving average.
So you said if it's above it, that's when you're looking for longs.
Yes.
Perfect.
Yeah. Well, I look at it, the angle of it. Like I don't know if you have it on there.
No, yeah, probably not.
Yeah, but it just kind of smoothed it out. Yep.
Yep.
To me.
Absolutely.
And basically, the 20 SMA on a 2-minute is basically your 9 EMA on the 5-minute.
Right.
And I want to be in the direction of that. And
yes.
We talk about fighting the trend, and every time we lose, we go against the trend. I look at it as the trend. So
right.
I never go against that moving average.
Yeah.
Or try not to.
Yeah. And dude, it looks like it's working very well for you. I like the moving average definitely works well. I mean, look at these pullbacks even on the 1 hour. It's being respected. So it's really important to be able to identify those conditions, and just trade with them.
If that 20 is going up, that's just telling me I'm looking to go long, and I'm looking for a pullback into that EMA. I take profits away from it. If it gets too far away from it, I know to take profit.
Yeah.
Which I'm having a problem with too, because I get out too fast.
Oh, that's all right. But
that's what basically told me to get in.
Yeah, and that's what it is as a trader, right? It's literally as a trader to just keep pushing yourself. Just keep pushing yourself, keep showing up, keep putting in the work, and keep, going forward. You know what I mean? And that's pretty much it. I mean, Rob, you got any trades you want to go over?
I could talk about another one on Friday, similar to Todd's actually. I'm trading MES, but it's similar to ES. I actually use the ES charts.
Okay.
And I just actually execute on the MES 1 minute. But yeah, so mine was at 8:59.
All right.
I took it from VWAP up to EOD end of day. VWAP at that point was, let me have a look here.
Hold on, I'm pulling it up right now. VWAP,
okay.
VWAP, boom, show plot. Okay, perfect. So you said 8.
Yeah, and the reason was as Todd said, there was a 5-minute candle at 8:30 news that bounced off of pivot point and also a demand zone I'd drawn at 8:30. So I wasn't sure whether to wait for another retest, because sometimes the market wants to retest after market open, after 9:30, and sometimes it doesn't bother to do that. It just uses the one retest and takes off after that at market open. So I decided to try this out because it was breaking above VWAP at 40143.
Yeah.
And
boom.
Yeah. And let me see. I don't have my 1 minute up right now, but on the 1 minute,
let me pull it up.
I was getting a bounce, and on the 5 minute, I was getting wicks. Yeah, I was getting wicks off of VWAP, and then there was a little bit of structure there. When it broke structure at, it retested VWAP at what was it, 850 something.
Yeah.
And after that 5 minute candle, then it came back. It kissed it, and then as soon as it kissed it and started to go back up, I decided to get in on that because it was above VWAP, and so my stop was really relatively small, right?
Yep.
It was basically just below the bottom of that red candle kiss back to VWAP.
Yep.
And my target was end of day, so I had a good risk to reward right in my mind off the bat.
I like it.
And my target was EOD, which was not the same as SPY's EOD.
Right.
Mine was 4157.
Yep.
So I basically got in there and set my target. I think it was half a point or 1 point before. 1 point. So 4157.75. Actually, 4158 was EOD exactly. So I set my target at 4157. Yeah. And it just made that nicely at 950.
Yeah, that's a perfect trade right there. I love that. That's why I love those end of day targets. And that's, once again, right, we always talk about it, but the areas of value are so important because they literally give you your entries, your exits, and your targets and your stop losses, right? Like, yeah, this is a beautiful setup. I like how you said sometimes the retest will happen, and literally that retest you're talking about is our pre-market low rejection trade that we talk about, right? So I don't trade futures, so when you're going, hey, it usually comes down and rejects this demand again after the open. And for all the options traders out there, that's literally the pre-market low, rejection. And I like looking at it at both angles, from a future angle and as a option angle, because at the end of the day, it's the same chart pattern and it's the same market auction. It's the same price action. It's literally the same trade. And it really symbolizes the whole auction philosophy, right? Where buyers want more shares, right? That's where demand comes in. There's more demand for shares than supply. That's where price rises, and then vice versa for the sell-off when there's more supply for shares. And these major moves happen at these areas of value. So it's all about identifying those important areas and trading off them. That was a wicked good trade. You could see price going to make a lower low. VWAP's very good as well as far as identifying market conditions. So my goal going into March, right? We got a brand new month. I'm super excited to trade it. And one thing I'm going to be doing is really focusing on identifying the conditions. And if I can't identify them, I'm stepping back and I'm letting the market tell me her direction. You know what I mean? And it's really good stuff, man. It's really good stuff, guys. I really appreciate you guys coming out and talking about your trades and showing up. This was another really good weekly recap, man. I hope everybody has a really good week. And let's get together. Let's keep this up and have a good weekend. All right, guys. We'll see you Monday.
Yeah, solid recap, guys. Have a good week.
Guys, thanks.
All right, fellas.
Solid week, guys. Thank you. Take care.